Welcome today, Gavin. We've got Gavin
Thank
Hayhurst,
you.
who's Director at the Australian Taxation Office, and we're going to talk today about super guarantee charge. So, a little bit about Gavin. Gavin's got extensive experience as a project manager for the Australian Taxation Office. He's currently the Director within the Employer Obligation Risk and Strategy team. In recent years, Gavin has implemented several SG law changes and is now contributing to a number of ATO projects regarding its service delivery for small business employers. So well qualified to speak today. He's an award winner for demonstrating the best of the ATO's cultural traits and has a strong focus on developing the next generation of leaders within the ATO. Gavin has a degree in taxation and has held ATO leadership positions in client engagement, risk management, and project management. And away from work, from herding cows, Gavin is heavily involved in his local scout group as an assistant Cub Scout leader and is an avid hiker. He's travelled widely and look forward to going back to New Zealand and Tasmanian mountains for more hiking adventures, as we all do, as we sort of exit COVID and hopefully remain that way. So welcome today, Gavin. Thank you for spending some time with us and sharing your knowledge in relation to super guarantee. So,
Thanks, Chris.
mate, we might start off with when does SGC apply, or what is SGC and when does it apply?
Yeah, okay. So, yeah, thanks, Steve. So, super guarantee charge is the thing that applies once an employer misses the original due date for super guarantee. So, what will happen, or as you know, the SG is originally due the 28th day in the month after the end of the quarter, so 28th of January, April, July and October. Now, if the employer doesn't make that payment date, then the SGC applies.
Okay. So, in a nutshell, what exactly is the charge itself?
Yeah, it's an interesting one, this one, and I'm glad you guys have asked us to come along and talk about it, because it is widely misunderstood. I don't even think it's that widely known what happens when an employer doesn't make the due date. So the SG charge is made up of a bunch of different things, right? So what we've got is the actual super guarantee shortfall itself. And there's a few things that I'll touch on that need to be considered in terms of figuring out the shortfall amount. There's the nominal interest, which is 10% per annum, and that'll accrue from the start of the relevant quarter until the earliest of the SG charge due date or the lodgement date. And then there's an administration fee of $20 per employee per quarter. Now, this is the tricky one in a way, because it might seem quite insignificant, but you can imagine if there's 100 employees involved and several quarters, this can build up. This can actually end up being quite a sizable amount, even though, it sounds like $20, but those are the fundamental parts of it, Steve.
Okay. And so, how is it, I mean, the $20, that sounds relatively easy in terms of each employee and how it's calculated. The 10% is based on, exactly how is actually SGC calculated at the end of the day?
Yeah, okay, so you can work that out because the maths is reasonably straightforward, right? So the key here is figuring out what the shortfall amount is in itself. So the first thing you need to do is to identify the relevant rate for the year that's involved, or years that's involved. Now, what you need to be aware of is that up to the 1st of July 2021, for most of the SG periods that we'd be dealing with, it'll be 9.5%. But for this financial year, up to July 30th of June, 2022, it's 10%. And just to note for the future, every subsequent year, the rate will be increasing by 0.5% until it reaches 12% in 2025. So this is the first thing you need to be conscious of. What is the rate? Because if you're dealing with something now, you're likely to have two rates involved. Okay, so the second thing then is to figure out, well, what are you actually calculating that SG amount on that 10% or that 9.5%. And so this is where you have to work out, well, what the employee or the worker has been earning. So when it's, and the trick here is that it's actually different between the super guarantee that you would pay on time and when the charge applies. So the amount is worked out slightly differently, and it's likely to be more for the super guarantee charge. So what we refer to it as ordinary time earnings. So it'll also include overtime, for example, that's been paid. Now, if you want to get into the really nitty-gritty of that, there's information on our website that will take you through all of that, because there's a few things that are in and out that you'd have to be conscious of. I think the main thing is just to be aware that there's a difference.
So let's say, so if I'm an employer, and let's say for whatever reason, 28th of the month has rolled past after the quarter, and then maybe halfway through or at the end of the next month, I realise that the super payment hasn't been made. I send the money off to the relevant super funds. What's the position there? In relation to the super guarantee charge?
Yeah, okay. Well, as soon as you miss that original due date, then the charge becomes liable, and the employer is then obligated to complete a super guarantee charge statement and submit it to us. Technically, the employer is then supposed to pay that amount owed to the ATO, and we will disperse it to the appropriate funds. So in the circumstances where the employer has then gone and paid the fund, there's two things that occur. Firstly, they can try to get that back from the fund and pay us, or then you go into the offset arrangements where it can be credited against future liability.
Right, okay. Yep.
So there's some things there that you'd need to consider and look into if that was the case.
Yeah, so would that mean that the next payment that would be made, you still got to pay the ATO the supercharge amount? Is that what happens?
Well, as long as you get back on time, you don't need to involve us. That in one way, that's the beauty of the super guarantee system. So pay on time, and we're not involved. The only way we'll see is through the STP and MATS data.
Yeah. Okay.
Or the funds data. So really, we don't want to know unless you've got to correct something.
Right. Okay. And so the elements that make up the SGC charge, you've got, we were talking about the amount that's got to be paid for each employee.
Yep.
We were talking about some interest,
yes,
which is calculated at 9.5% or 10%, whatever the periods are.
Sorry, the interest is always 10%.
Always 10? Okay.
Yeah. What you're calculating, where the rate is different is the SG rate itself, which will vary depending on the year that's involved.
Okay. And is there a way that, is there somewhere where you can go to within the ATO website that enables you to try and calculate maybe what that all is, or get some information about the relevant components of it?
Yeah, just look up super guarantee charge on our website, and you'll get taken to some links. But what you will find is that there is you can download a Excel version of the charge statement, which will help through. It's a bit clunky, right? And we need to do something with that at some stage. Or you can access the super guarantee charge statement through online services for business. Right.
Okay. In terms of, are there any other penalties that can sort of be applied?
Yeah, this is the tough one here, because there's not a lot of flexibility with super guarantee, as you may be aware. So what happens here is you've got several penalties that can come into play. There's the Part 7 penalty, which is probably the most commonly known one. That's levied under the Super Guarantee Administration Act. And the maximum Part 7 penalty imposed is 200% of the super guarantee charge. So it's pretty significant. Oops, yes. I'm sorry, I might have to move around here. Doesn't want to work for me, these lights.
We can still see you, it's fine.
Yeah, that's fine. I can just be the shadowy guy in the background. So what you've got is the part-time penalty, 200% of the super guarantee charge. So what happens under the legislation is this would be automatically imposed, and then we remit depending on the behaviour of the employer. Okay, so that's the first one. Now the details around that are laid out in our practice statement on the Part 7 penalty. Now, the second one is an administrative penalty. So this is for false and misleading statements. So if we get something that turns out to be incorrect, then we can go again with some additional penalties on top of that, which can be up to 75% of that super guarantee shortfall. So you can see there's some add-ons here.
Yes.
The third one is not technically a penalty, but I'll mention it here anyway, is the general interest charge. And so that will apply when that payment is not made on time. Now, this one will be relevant, I think, for many of the clients that you as insolvency practitioners will be dealing with, because I'd assume that many of them may not be able to pay or pay on time. And so that general interest charge clicks in until the payment is made in full. Yep. Fairly standard with the other heads of revenue that you'd be dealing with as insolvency practitioners. So those are the two penalties that come into play in the GIC. Is the third element.
Okay. There's also I remember back to my old accounting days about tax deductions as well, wasn't it?
That thanks for asking that one, Steve, because once you hit the SG charge territory, it's not tax deductible anymore. It's only tax deductible where the employer is paying on time.
Yep. So it's pretty it's pretty tough actually. If you start missing it,
it is. I guess that was all designed into the system at the beginning to try and encourage the payment on time, right?
Well, it's not his money; it's the employer.
Not a penalty, but certainly an incentive, you'd hope.
Yes. So when do penalties and interest actually start to? When do they kick in, and when do they generally date back to?
Well, the penalties will apply from basically when they're levied, right? So how do we describe this? They're not sort of, I don't know, to answer your question, sorry, they apply from when they're levied. Yep. Basically, to answer that question, they don't sort of go back. It's just sort of right, in this situation, this is what you're up for. And they're back. Amazing. So it's not like the GIC or anything that accrues from a certain point that just applied.
So with the interest, would would that be levied from the 28th onwards, or would it go back?
Yeah, that goes to the start of the quarter that is involved.
The start of the quarter. Okay.
Yeah. So, for example, if we were dealing with a 1st of January to 31st of March quarter this year, it would apply from the 1st of January, from the commencement of that quarter that there's a shortfall for.
In terms of negotiating with the tax office, is there a way that you can negotiate the penalties and interest in relation to, so I've been bad, but it's I haven't paid my super, but all of a sudden I've seen the errors of my way and want to become a good taxpayer again. Are there ways? Is it possible to do that? Get a revision?
That's a really good question, Steve. I think the penalties aren't something that are negotiated. What we encourage, though, is for employers or their representatives to engage with us and talk to us about the circumstances and let us know what's going on. Basically, engage with us and let us know what's going on. And, because our officers have to make those decisions around the penalties. And if you were to cast your eyes over our practice statement, you would see that what we look at is the employer's behaviour, how they engage with us, and their payment behaviour. So the less engaging or the less they engage and the more recalcitrant, if you like, an employer is, then the chances are the penalties are going to be a bit ugly. So we want people to engage with us, and we want to get businesses on track with us. So it's not about negotiation, but just engage with us. So there's two ways that this can occur. Firstly, there might be an audit going on and you're engaging in the audit. So you want to be engaging with that auditor and, letting them know what's going on, what the issues are, what the circumstances are, but just try to work together. I mean, that's what we're trying to do, hopefully. The second one is where an employer will self-disclose. So there's no audit, there's no review, but through your work, you've picked up that there's a shortfall and you would just submit that super guarantee charge statement. So ideally, that'll happen through online services for business. But even if it doesn't, what we would ask that you do is then submit a letter or some correspondence to us through the mechanism, hard mail, or through online services for business that explains what the circumstances are for the employer. And that's your opportunity, I guess, to argue for no penalties or lesser amounts, depending on the circumstances.
Let's
state your case, basically.
Because I think it's a fairly consistent advice that we've had in the last few Red and Black webinars, where we've had representatives from the ATO come along from the different areas and talk to us, and that was the early engagement tends to get a much better result.
Yeah, every time, Steve. Yeah.
I mean, it's interesting. One of the things that we see as insolvency practitioners is, we do see outstanding super in the companies that have gone into liquidation, but we also see things such as director penalty notices, those sort of things being issued in relation to the super guarantee debt. It would appear that, and also anecdotally, we also understand that where companies are negotiating payment arrangements and those sort of things, generally the super guarantee charge is the first one that they like seeing the payments come up against. Do you have any comments about just that approach at all?
Well, I can't comment specifically on the way our lodge and pay people approach the collection of outstanding amounts, but the key distinction, I suppose, is that in this case we're collecting on behalf of individuals, people like you and I out there who haven't received their super guarantee, as opposed to collecting on behalf of the government for unpaid GST or unpaid income tax.
Yeah, well, as I think we said,
and we do have some additional powers in terms of the collection mechanisms, like the director penalty notices, to make directors personally liable.
Yeah, we have seen a little bit of that over the years in relation to some super debt that's been outstanding in some of the companies that we've been administering. What, in your view, what sort of are there any common mistakes or errors or issues that come out a lot in your dealings with SGC and companies?
There's one or two. Well, the first one is the whole reason for having this webinar in the first place, which is that it's not particularly well understood what happens or what an employer needs to do when they haven't met their obligations on time. So that's the first thing, is just understanding that there's this whole mechanism that goes on, and the outcomes of it can be quite ugly if an employer isn't engaging with us. In terms of the penalties and so on, as we've been talking about. The other thing I think is, I also touched on earlier, but it's this distinction between the amounts that the SG is levied on, between paying on time and paying late. So there's that distinction between, excuse me, the ordinary, sorry, I got it wrong before, actually. It's the ordinary time earnings that we calculate the super guarantee on, but if it's not paid on time and super guarantee charge comes in, then we're talking about salary and wages, including overtime. And the key thing is understanding the distinction And as I said, you want to know more, go to our website and you'll get more information there. The third thing is going to be around, is actually often around just who as a worker is entitled to super guarantee. So it's broader than an employee as we would commonly understand it. So the legislation does make it a bit broader. So for example, you might have some contractors that would be, an employer might have some contract workers, they would also need to pay super guarantee on. Generally, that's where they're involved in providing physical type labour scenarios. But again, that's one that can get a little bit tricky depending on the nuances of what they're engaged to do. So it's worth having a look into that if you bump into that sort of thing. You know, they're not a a pay-as-you-go withholding employee.
And so some of the accountants here today, they might have clients that might come to them that might not be companies, they might be individuals that where their company hasn't paid their superannuation on time, might have been subject to paying SGC. What should an employee do in terms of being able to to make sure that money that may have gone into being paid to the tax office actually gets paid into their super fund? Is there anything that they
That's great question. Yeah, I think we're aided these days by the advances we've made on our online services for individuals. So an individual, you or I, anyone on the webinar here, we could log in to the ATO website and see what's been going on, through MyGov, right, and check to see what our super balances are and see the payments, because they get reported through to us, and now we make that visible. The second thing they can do is also, of course, go to the super fund itself and check to see the amounts are being paid. And what we would recommend where an employee has some concerns is that they would engage with their employer in the first instance to just check with them to see what's going on. Now, we also recognise that some employees, particularly in small business scenarios, might feel a bit uncomfortable with that. And for various reasons may not want to raise it with their employer, and they can raise it with us and lodge what we call a complaint, essentially, and that's on our website, so they can go there and get the information and lodge what we call an employee notification to us, and we will investigate it.
Yeah, and again, we've seen some cases where that may have triggered a super audit somewhere down the track.
So what we would do though is encourage people, go to the website, go to the fund, check, and follow up with the employer as the first course of action.
Okay. Well, look, I think we might open it up to questions now, and I might get Chris, who's lurking in the background, to actually ask the questions, if that's all right. Chris, you there?
Yes, I'm here. No problems at all. Lurking in the background that I am. From Kathleen Evans, there is a late payment offset in the superannuation guarantee charge statement. Is a Part 7 penalty worked out after allowing for this offset?
My understanding is that it's not. That is, the Part 7 penalty is calculated on the full shortfall.
Okay, now we've also got another question from John Buff. Please confirm when the penalties are satisfied. It appears, please confirm when the penalties are satisfied, full stop. It appears to be when the SGC statement is lodged, even if the contributions had been paid months or even years before. The 10% interest charge should go to the employees in lieu of fund earnings, even though the contributions have already been paid.
Yeah, the nominal interest is also paid to the employee. That's correct.
Right, now does this answer everybody's questions?
well, they probably do, Chris.
Yeah, look, I personally had a question. We've had a little bit of experience with the new small business restructuring regime. We've had some very positive experience with two matters, actually. And I must say the AT has been very good to deal with. But we have been asked on a number of occasions, the eligibility criteria requires that all employee entitlements must be paid up to date. Let's say that they've paid the contributions and perhaps not have paid the penalties, or not able to pay the penalties. Does that mean that they would be eligible to enter a small business restructure? You may not be able to answer that question, but I just wondered. We have been asked that.
No, I can't answer that question. I'm sorry.
Mm.
If you flick it through in an email to me afterwards, though, I can see what we can get back to you.
That would be interesting. Thank you.
All right, we got any other questions from anyone? Okay, well, if we haven't, we're finishing virtually right on time again, which is what we aim to do. Thank you, everybody, for attending the Red and the Black seminar with the ATO. This is the last one for the year. We'll look forward to welcoming you back next year. Gavin, thank you very much for sharing your knowledge in relation to this area and your time. We appreciate it greatly. We wish everybody a safe and happy holiday season, and hopefully no more COVID next year. And we'll look forward to welcoming you back then. Yeah. Thanks again, Gavin, and thanks everyone.
Thanks very much, Steve and Chris. Appreciate your time.